Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 8th of March, comes to you from London. And I'm wearing my sunflower again for the people of Ukraine. And I've decided to switch my heating off. It's a little bit chilly, so I'm wearing a bit more clothing. Temperature in the office has dropped down to about 15 degrees. Outside, it's 7 degrees. I live in quite a big house, and so the rest of the house is somewhere between the two. But just reducing my energy consumption is part of the way. If we all could do that across Europe, that might just have an impact on the amount of money that we give to Russia. It's all these little things all add up, and of course, we are looking at the spectre of what's going to happen in terms of sanctions on oil and gas. That's creating a lot of price volatility in the market. We're seeing Dutch gas up this morning some 6.5%. There was a time where 6.5% was a very big rise on gas prices, but of course now that's actually very sanguine, given that we've seen rises of 40, 50, 60% some mornings at the open. So we're steadying a little bit, and we see that showing up in the charts. And we'll come back and look at the energy mix. And of course, we cover it in our daily reports as well. Here's today's report out, so with all the trends and targets. And you'll find that in the news if you're an Updata user. And lots of stories there on the reports that we're recovering. But let's take a quick look at what's going on in the major markets. So first of all, we look at the dollar. Dollar strength is still the key. We've talked about that for a long time. We put out a report last week. We're very bearish now for the euro, falling below that 110 level, making lows that we saw in the pandemic, and we've got targets much lower, so that's still a concern. Sterling sitting at 131, looking set really to break below that 130 level. Stronger dollar really being the key, and against the euro we're still holding that 120 level, so sterling sits somewhere between the euro and the dollar in terms of its where it's going, so that's going to be quite key as well. Bitcoin is steady, up 2% this morning, still just battling with this long-term cloud support. Of course, if we fall through the low last year of around 30,000, we deactivate the 83,000 target. The S&P 500 index was down nearly 3% yesterday. We are seeing a little bit of capitulation starting to occur. This downside target's really quite key. The Nasdaq target is still much lower. Tech will fall more heavily, down 23% potentially on the target there, which is activated. We're seeing the futures up a little bit this morning after a 3% fall. Not a big surprise to see a little bit of a bounce. Don't be surprised to see these futures deteriorate. We've seen that as a feature of the market, where the market opens with some strength, and by the end of the session it starts falling away again, and it just can't hold those gains, and that's a really bearish sign. So we are in territory where we see that. The VIX volatility has fallen back to 35. Remember, we say that if we're in the 30s, the market is fearful, and we've seen that gradual rise in the VIX, and we're really crossing into long-term bullish territory here. Bullish territory for the VIX means VIX goes higher, the fear index is higher, that's bad for markets, and we are just starting to see that increase in the fear index and uncertainty in the market, so the VIX is certainly something to keep an eye on. The FTSE future is up 0.37% this morning. The DAX in Germany has had a torrid time. Germany, the major economy that's being hit the most by the Russia-Ukraine invasion. And so we are just seeing here this falling lower. And of course, that aggression that we're seeing from Russia against Ukraine is having an impact on Germany. The CAC 40 is up as well this morning, but it has fallen very heavily as well. Asian markets actually fell heavily overnight. The Japanese market down nearly 2%. The Hang Seng down a further 1.4%. This has really been falling quite badly. And we're seeing even Chinese stocks down over 2.3%. Political risk becoming a bit of a feature. And we're starting to see signs that investors globally, especially Western investors, are starting to reappraise where their money is. And if you look at the Sensex, it bucked the trend a little bit up as well. The Aussie market obviously resource laden, fell lower, still a long way from activating its downside target, unlike other markets. So that's certainly something to keep an eye on. And if we take a look at, we'll look at the energy mix in a minute. We are seeing a fallback in commodity prices. Wheat falling, it has risen over 40% in the last week. It's fallen back about 8%. Really hard to read the targets. We've got one here on the target. When the charts go ballistic like this, it's a very hard read. And if we look at corn as well, similar. Gold is above that 2,000 level. We've given the targets before gold. 2,400 is the target. That's activated. That's where we're going. Silver needs to break the 30 level to really run again. And if we do that, we'll go to 50. So we've got targets saying we will go above 30. But only just. But the key thing is the move, the sideways consolidation, the next move. We need to break 30 for that. We've seen platinum and palladium rising as well. Palladium has really rocketed. Russia accounts for 30% of palladium production in the world. And so we are just seeing that moving higher, and copper also breaking to new all-time highs yesterday, and that is activating the upside targets. We've got here 30% higher on the 1% point and figure chart. Remembering this is my weekly, daily and 6-minute long-term, medium-term and short-term view of the market. Looking at US 10-year yields, they've been seesawing. A lot of volatility in treasuries this week. The Fed saying they'll raise rates, of course, but inflationary fears pushing that higher, but then a worry about the global economy and the impact of higher oil prices means that we are just seeing a lot of volatility in the Federal Reserve rate, so that's quite key. Tech stocks, all eyes on Apple. We haven't quite yet activated this downside target, the darling of the stock market, US's biggest company, of course. If that breaks lower, we've got a 27% fall, so that's one to watch and really quite key there. You could always remember just hit the T key in Updata and you will get the trend and targets, and you can play with the box sizes here. So 116 is the target there. I prefer to use the percentage charts, and that means when I'm scrolling through I've got like with like. So what's going to go up? Well, of course, nickel is really running, and that did make me think this morning I should take a look at Glencore, remembering I'm running multiple sources into Updata. So here I'm looking at Glencore. This is coming from Refinitiv Icon. Again, I just pressed the T key. I've got my targets. 530, about 13% higher, so that's quite good as well. So we are seeing that move higher as well. So Glencore quite key, one to watch as a big nickel producer, and nickel has really rocketed. We've seen here the big moves there on nickel as well, and really just gone ballistic in the last few days. And I put a post on LinkedIn this morning to my 20,000 followers, just looking at how that nickel chart looks versus TTF. It's quite fun quite often just to look at how these charts compare. Now, looking at crude oil, we put this out this morning to our clients. We've still got the upside targets there, remembering our long-term target for crude is $150. Looking at US nat gas breaking below the cloud, what we would give for European gas prices to break below the cloud like that. We've got MBP way away from the cloud, that's UK gas, and TTF also way away from the cloud, yet we're breaking down in the US. Emissions finding the floor. They've got a bit of a recovery going on this morning, so that's looking pretty good, but a fall below 55 would be bearish there. German power up 6%, breaking through the 180 level. That's really like a triangle pattern set to run higher. So here are all the targets there on German power. If you're looking at those on your OTC data, that's going to be quite key. So just keep an eye on these point and figure charts, on the 1 minute charts in particular. That's going to be the way to navigate the market. And you can see here we've got lots of upside targets there. Keep an eye on those on your OTC charts. That's it for today. Until tomorrow, happy charting. See you then. Spare a thought for the people in Ukraine. Bye for now.